Everybody, I debated on doing this video on my insurance page, but really to me it's more has to do with real estate, homeowner, than really what it has to do with insurance, in kind of my opinion. So I'm doing it here. I'll share it back over. But obviously most of you guys know I launched an insurance brokerage, independent insurance brokerage, in March of 2024, so not quite a year yet, and boy, that's been a very humbling, still is everyday humbling experience, but in doing so, right, I've learned so much, and obviously me getting in here was kind of a weird time. I didn't know the insurance rates were like skyrocketing up, and carriers like weren't writing business, and like I had no clue that like existed. Had I did, I probably actually wouldn't have. I would have chosen to have delayed that, because it's not easy to get in it and start from scratch and to try to tell carriers, hey, yeah, let me write under your business when you don't have business, and they're already like really tight on what they want to approve anyways. But anyways, so I want to share with you guys, right, if your rate has went up and you're like, well, I don't pay my insurance every year, it's paid out of my escrow account, how does that work? So I wanted to make a video to really explain that, because, right, if your rate goes up, I'm going to give you an example of what's going to happen, right? Let's just say you're paying $1,000 a year now, and by chance, let's just say your rate jumps up $1,200. So it means it goes from $1,000 to $2,200. And I'm only saying this because that's going to make the math really easy. And then let's just say your payment is $1,500 a month. Well, what's going to happen is your escrow, whenever it pays out your insurance, your escrow is actually going to have a negative balance. So they're going to pay it. They're going to go ahead and pay that extra money. But then whenever your escrow comes up for renewal, and if you're a homeowner, you probably know this, your mortgage payment might actually change every year. It probably doesn't change up or down by really more than $100. It really shouldn't, but sometimes maybe a little more. But it's because of stuff like this, or taxes go up, or maybe they over collected, or maybe they under collected. So it has for me every year that we've owned our home. Our rate, sometimes it goes up a little bit, sometimes down a little bit. Sometimes, well, I think the second year we bought it actually jumped way up, and then it dropped way back down. Then we got like an overage check. But what will happen there is if your insurance goes at $1,200, which arguably is $100 more a month, that means that your yearly payment, right, your mortgage payment, your monthly mortgage payment should go up by $100. And so they're going to kind of over collect that mortgage. And if you're actually behind, if you have a negative balance, it may even go up even more, because it's got to pay for the overage that you had before, and then it's also going to anticipate the new year coming with you paying the same amount, right? So that escrow balance, which escrow is going to pay for you, if you got a loan on it, you're pretty much going to have an escrow 99% of the time, which is going to pay your taxes and your insurance, right? So you don't ever have to pay them. You'll still get a tax bill, but you don't have to pay it. It's going to always be paid out of your escrow, which makes life really easy, and I'm very pro escrow in that sense. But what you need to do, step one is obviously you got to shop insurance companies, right? You got to shop quotes, figure out who you want to go with, who's giving you the best deal. And typically the easiest way to do this, you got to put forth a little bit of work. And I'm not saying this to make my job easier as far as quoting you. What I'm saying this is you need to give me the tools I need to give you the best quotes possible. So what that is certain information, and it varies company to company, underwriters, things go along, and communicate frequently. But most importantly is if you give me like your deck page, which is kind of like the page that's got all your numbers on it. If you give me that's got a ton of information on it, to where I can literally go in and match your coverage. Now, if you may say, hey, Steven, what's your opinion on this coverage? I may say, hey, that's a lot of coverage. That's great. I may say, hey, maybe you want to up your coverage, or hey, listen, that's solid coverage. I think you're good, right? I can give you those opinions, but for the most part, most people want to compare, what a new carrier is going to give them, and basically compare the exact same coverage as what they have today. That's really the main thing, getting me that deck page, so I know like what your coverages are, so I can ensure when I go in and quote you, because this is where this becomes a sales game, right, in insurance. If you have real high coverage limits to protect you, Sure, I could probably find a carrier that gives you like state minimums or, super low coverages on liability if something does happen, to probably find a cheaper rate for you and said, hey, listen, yeah, I was able to save you $500. Here you go. Well, if the coverage is crap, it doesn't really matter, in my opinion. Knowing how the game is played, insurance is something we never hope to use, but if you do have to use it, you're going to hope you better have those high coverages to protect you. So I'm happy to have those conversations, but that's the big reason why I need a little bit of work up front, is you got to track that down and get it to me. So that way, when I can say, hey, listen, I see you're paying $2,200. I gave you this, ABC carrier over here gives you the exact same coverage, what you have now. And it's $400 cheaper, right? So it makes sense to go with. Because if you don't give me that right, and a lot of people say, I don't know my coverage, just give me whatever you want. Like, I'm gonna get you what I'm gonna call like solid coverage, but it's not gonna be fair if that solid coverage is maybe it's the exact same price. He's like, you know what, I don't want to switch. But what if the coverage you have now is actually like crappy coverage, meaning your liability is really low, 25, 50,000, and I'm giving you 300,000 in liability when it's the same price. Well, realistically, like, you're way better off switching. So that's what I'm saying. A little bit of legwork up front is what you need. But shop carriers, you got to find the insurance that you want, and then really pick the date that you wanted to change. The thing is, a homeowner's insurance, it's a year policy. So you can absolutely wait, and probably the easiest way to do this is wait for, kind of go ahead and have stuff set up to be canceled on renewal. Go ahead and have your new insurance set up to start, on that date as well. But some people call me, and they're a month in, didn't really pay attention to how much their insurance went up, and now, they're kind of panicking. They want to change, save them some money. You can still do it without waiting for your policy to end. You can absolutely do it. Now, it is a little bit annoying, but I'm not going to pretend it's just like a couple buttons and it all works out perfect and it's a Cinderella story. You never have problems. There's always crazy stuff that happens. But for the most part, you can do a lot of things to help you and make sure it does go through smooth. But you're going to probably have to send a few extra emails, make a few extra phone calls, because we have to make sure that an insurance company, the carrier, and your lender are communicating and they're getting it worked out. Because otherwise, if you just say, click the button, cancel that one and all that, and you never pay attention, you're probably going to get a notice in the mail that's going to be from your insurance company, say, hey, we haven't paid yet. And it's going to mess everything up. So anyways, let's just say you found better coverage for cheaper and you want to switch, right? Go ahead and bind that policy for the start date. Now what you're going to do is you're going to call your current insurance company and you're going to go ahead and tell them you're going to want to cancel it on that other start date. So what's going to happen now? Right? And let's just say this is a 6-month time period. I'm trying to use easy numbers and easy things to make it make sense to you the best. But so let's say you're 6 months in your policy. Let's say you're paying $1,000 for your policy. So you got 6 months left. Arguably half of that would be $500. So what's going to happen is you call in to cancel that insurance company. If it's basically right at that perfect 6 months, you are actually going to get a refund check from your current insurance company for $500. That is not going back into your escrow. They're going to send that. Now, that's not going to be quick. Usually 2, 4, 6, 8, 10 weeks, you might be waiting to get that refund check. It is not a fast process, so keep that in mind. But you will get it. It is yours. You got a couple options when that happens. I'm going to look at my notes and make sure that we're good. So a couple options when that happens. You can take that refund check, send it back into your lender to be re-put into your escrow account. So it kind of reimburses your escrow account, which is what a lot of people will do. I think this is like 50-50 on what people do. So some people will do that route. Other people will go ahead, just cash it, and that's their money. Or maybe put it in an account or save it up. Because what's going to happen is the insurance company, your escrow account, when the new insurance company sends them that bill for, let's just say, $900, they're going to go ahead and pay that out. Well, now you've kind of paid out $1,000 originally, and now you pay another $900. That's $1,900 your escrow is paid out, so it's going to have a negative balance, which means, again, whenever your yearly mortgage comes back up, they're going to jack your payment up because it's got to offset that $1,900. That balance, which you should be in the negative, arguably like $500. because that's what you got the $500 check for. F4C, you see what I mean? Send it in, you're good. But yeah, so want to kind of fill you guys in on that's how it's all going to work. And the thing is, let's see, or the next year payment can go up. The thing is, what you got to do with a little bit more work is you need to, every week, it needs to be like, hey, listen, every Monday or every Wednesday or every Friday, whatever it is, you pick. You need to be emailing your loan company. You need to be emailing your insurance company. You need to be calling them at least once a week and saying, hey, I'm just checking in to make sure that my new insurance company, you have all the information that you need, right? You can go ahead and send your lender, because you'll get it from your insurance person as soon as they bind it. You'll get the whole new policy. Go ahead and send it to them. You got to be proactive, because what can happen is that that insurance company never collect payment, and all of a sudden you get a thing in the mail that says, hey, we haven't collected payment, we're canceling you in a week. And by the way, even if you do pay us, we're still canceling it, right? I've seen this happen. I've seen this happen to people. I had a crazy situation happen. It's really, I think it was one of my first times doing this. And I hate that it happened to, because it's such a nightmare experience. But we were able to find a home insurance company that saved them a ton of money. So we went ahead and switched. Everything was somewhat smooth in the process of switching. However, they had switched the policy, and like a month in, the insurance company, I don't know if they send drones out, I've always heard those stories, or they send people to drive by and take photos. Well, there was a tree, had some limbs hanging over like a storage shed, and then there was a little bit of trash in the front yard. It really, from what type of work that they did, nothing major. It wasn't like a junk place at all. But there's some trash in the front yard. Well, sure as heck, they literally sent them an email and just saying, hey, and there was like a gutter that was kind of like coming off a little bit. And they sent them a mail and said, hey, listen, we've reviewed it, and actually we're going to go and cancel your policy. It'll be canceled in 30 days. So not even a chance to like fix it. And they just wanted this, the insurance company just wanted out of it. So now you've had like canceled one, got a refund. Hey, listen, payment went through. Now they got to cancel another one, and then they got to go find like a third one. That was just an awful. And I'm not saying that will or won't happen to you. Hopefully, it should not happen to you. But again, it's one of those things I've seen. I like to share the stories that I've seen, because I'm sure it probably will happen eventually again. But that's where you just got to be a little proactive in your communication with these carriers and make sure everything's going good. So, long-winded video to kind of tell you it can be done. I will say it's easy. What you got to do, it's just a little bit annoying, because you got to again, make sure big companies are communicating with big companies. When they all suck at communicating, you got to kind of help them. Lead them to water right there so they can drink it. And then you need to verify that they have drank it. That's a big thing here. But if you ever have questions, real estate insurance, always feel free to holler. Happy to help. See you.